That housing news and what it means for the U.S. economic recovery was one of the hot topics today at the Jackson Hole Conference in Wyoming. And that's where central bankers from around the world are meeting to talk about economic policy. Steve Liesman spent the day speaking with them and reports there is still much disagreement on when the Federal Reserve will make a change in its massive stimulus program.
Good evening. A lot of differing opinions here in Jackson Hole at the Fed's annual economic symposium over the direction for the central bank and the next moves for the Federal Reserve. Some of those differing opinions came in interviews I conducted today with 3 Federal Reserve presidents. Now, 2 of them, Dennis Lockhart from Atlanta and John Williams from San Francisco, had pretty much the same opinion, suggesting that it's full steam ahead for the Fed to reduce the amount of stimulus in the economy, perhaps at the meeting as soon as next month.
The way I'm thinking of it at the moment is I'm actually looking at the data and asking if they deny or in some way undermine the basic outlook that I have in place. And on that basis, then I could get comfortable with a move in September of some kind.
I do think if the data continue to progress as we've seen, then I do agree that we should edge down or taper our purchases later this year.
However, St. Louis Fed President Jim Bullard, he had a different opinion. He's a little more worried about the strength of the economic recovery, not quite so confident in it, and he says the Federal Reserve should take its time.
I don't think we have to be in any hurry in this situation. I mean, inflation's running low. You got kind of mixed data on the economy, so I'd be cautious. I wouldn't want to prejudge the meeting, but I think we want to take our time, assess what's going on, and before we make a move here.
Among the research papers presented here today was one from noted Stanford economist Robert Hall, and he says the biggest danger for the Federal Reserve is to exit too quickly from its stimulative policy. He says there could be political forces for the Fed to raise interest rates sooner than it should or to reduce the size of its balance sheet. Also, Christine Lagarde, the IMF managing director, addressed the group at a luncheon, and she said the exit from these unconventional monetary policies, it could get messy, and she urged central banks to work together. And she even suggested that some countries that are affected by tighter monetary policy, they could use some currency intervention. That's a strange thing to come from the IMF managing director. She urged countries to wait until the recovery was firmly in place and to use the time period created by the quantitative easing to reform the financial and economic systems. Finally, a lot of debate over how effective quantitative easing is and how it works, but no consensus has emerged, and maybe that'll happen in sessions tomorrow. For Nightly Business Report, Steve Liesman.